Hey, this is Jack from Alphacharts with a state of the market video. Today is April 26, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, if you like these videos, please like and subscribe to my YouTube channel. And you can find me on Twitter at Alphacharts365 right over here. I share charts and ideas and all kinds of market related and sometimes not market related stuff through this account. If you really like my market stuff, I do have a subscriber group where we do in-depth videos. We do focus lists, which is usually the top 5 or 6 names that I really like, including ETFs. I do annotated charts off those focus lists. Honestly, the focus list video and annotated charts is probably worth the $10 a month by itself. I also give you, the midweek videos and the midweek market note and the weekend market note and all kinds of different posts and ideas, again, just for subscribers. So, like I said, the focus list video and the annotated charts, well worth that $10 charge. Price tag to this. It's a month. It's monthly. And it's a great deal. So check it out at Alphacharts 365 if you are interested. Let's get to the charts. I'll be using DeepView as my charting software and screener today. If you're interested, go to deepview.com, right? All right, so let's go. This is my dashboard view. And actually, I think I'm going to go to the regular view, actually. Here. And just go to state of the market. There we go. Sorry. All right. So get in here and there we go. All right. So actually load this laid out. Probably should have done this first time. Okay. Now we're ready. All right. So here we go. We got the SPY up here and we had a beautiful day here. Actually, volume was a little bit lower than the prior day, but it was a nice move right into the, well, now flat 23-day EMA, right? We also have the 50-day, which is basically flat right above it. So yes, I bought stuff today, some stuff. I'm still, have my cash level, reasonably high. And I think that we need to get above the 50-day for me to really feel comfortable in this market. I know there was a ton of bullishness today all around, but I still think that we have a lot of work to do in this market for me to feel totally comfortable and say that this scenario is off the table. I don't think it's quite off the table yet, just from the SPY chart. On the week, it was up 2.65%, a really nice up week. And when we compare that to the RSP, you can see the RSP was up also, but not quite as much. And we go to the daily today, you see it was barely up today at all. And so there's a divergence there between now obviously Google and Microsoft really, really, really took the cake today, right? Google was up 10%, Amazon was up 3%, Nvidia up 6%. So there's they were really, really big, and RSP could not keep up with that, and really they were basically flat on the day. Again, still underneath this 50-day, and still underneath this general area right there. So again, it has work to do on the equal weighted as well. Looking at the Qs, as we would expect, moved higher right into the 23-day. And see how easy technical analysis is? If you don't like where you put the spot is, just move it, right? So there's your B right there, something like that, right? And then we'll see. Again, I don't think it should go higher than this basically flat 50-day moving average. If price does get above the flat 50-day moving average, then I think we're full board, bullish again. As of right now, though, if I pull this all the way across, right now we're just retesting from the underside this potential area right there. Let's just make that a little bigger so we can see it. So we'll see if this is, just a snapback rally within a new downtrend and something like this plays out, or if this decides to kind of chop around a little bit, get the pull the 50-day in, and then break out above it, right? That it could go either way. But as of right now, this is the area of concern, which means that we're in an area of supply, right? So do we want to get a crazy bullish right here at an area of supply underneath the 50-day? No, I think we take some progressive progressive action, right? Progressive buys. So there's your cues on the week, up almost 4%. Equal weights were up 3.25. So nice day for the equal weights. Nice week for the equal weights. Still underneath this general area. And again, now a declining 50-day. Not the best look, right? Again, is this just a snapback rally within a bigger ABC type move? It remains to be seen, but I think we can't take that off the table yet, even though I saw a lot of high fives on social media today. Mid caps, again, under the 50-day, retesting this area from the upside, from the bottom right up. Not that great looking. And same thing for IWM, under a flat 50-day and a retest from the bottom. We'll see. Again, I don't want to I don't want to, there's times in the market where it's better just to say, okay, we'll see. I don't have to trade. I can trade small. I can, we have, what do we have? We had PCE today. We had crazy, earnings last couple of days and into next week. I think we have Apple and Amazon next week. We have FOMC next week. Like, that's a lot of potential volatility, and it could go either way. So unless you have a high conviction, and we have these indexes, and most of the indexes, equal weight and cap weighted, under a flat to declining 50-day. That's there's still caution to be had out there. Here's XLF. We said there was two options here. Does it go break out, retest, and go higher or not? I mean, it can still technically flag here, right? And then break out. That's a possibility. It is literally sitting on its 9-day, 23-day, and 50-day moving average. So, it could break either way. But financials in general have been kind of strongish. So we'll see, if they do this breakout, but it's been nice looking for the financials, which I think is a positive. They're at least, holding up better than even most. Here's your semiconductors, VWAP from the top, and you see it has, still underneath a declining VWAP from the peak. And it is right on the 50-day moving average. So, it's got to get above 220. Above 220, excuse me, above 220. And I think that, okay, we're starting to make this base look to it, right? Maybe the right side of a base, right? If we get above 220. If we can't get above 220, then there's no reason, there's a trend line there. There's a lot of things kind of maybe holding it back. And if it can't hold back price, well, then that gives us the information we need to be a little bit more aggressive. Obviously, it was a great week for semiconductors, up almost 10%, and the prior week it was down, almost, 10%. Oh, and by the way, just an inside week. What a monster of an inside week. But in the context, if you just say, okay, it's inside week, who cares what this bar looks like? You can say that, hey, maybe this is a consolidation within the bigger context of this new potential downtrend. So think about that. Equal weights up more than the cap weighted. Well, that's actually really good to see. First time we've talked about that today. I mean, was that inside day too? Let's see. High was 225.59, 225.72. No, it's not inside day. It went higher. That's good to see. So there is some hope for semiconductors out there. Again, a very nice week. So we like that as well. And it's just slightly above the 50-day. Again, doing better than or right at, at least as good as the SMH, which is really nice to see. IYT. So this is the transportation ETF with a declining 50-day moving average, and it really did not even participate today at all. And even on the week, it was basically even, but even to down on the week. Equal weight transports was down quite a bit on the week, and again, did not participate today at all, and is under the 200-day moving average. There's a lot of nastiness in transports. Maybe that's a precursor to other things coming. That's a big negative if transports aren't doing well. I put more weight in semiconductors, but transports are a big deal too. Let's see, ITB, this is the home construction ETF, kind of held where it should, but still under a flattening 50-day. Okay. And then we have XHB, again, kind of held right there. And this 50-day is still rising, but won't be for long unless price can get back above it. We'll see. All right. So overall, I mean, I think still caution. That's what I mean. There's some mixed signals in there. The ETFs are looking better, right? Transports weren't, but beyond that, the financials were, semiconductors were, and home builders were in between, right? Transports were the only real bad ones. And again, we have to get above the 50-day, in my opinion, for things to really, really look much better. Let's go to the internals. Here's the internals, and we got VIX. The VIX is now at 15. Again, that's a nice VIX, right? Now it's coming down from here, right? We didn't get the shoot back up. This was, which is what most people were expecting. It's coming back down, which is pretty good. By the way, let's just see this. Yeah, it's kind of like in that, right? Kind of crazy. Part of this broadening um, formation right there, something like that, right? Close enough. All right, so we have the VIX there. We got the credit spreads again moving lower. That was why I was always in the camp of a generic run-of-the-mill correction, and it was even less than what I thought so far. Again, it may not change, it may change still, but this tells me that I don't think that we're in for a complete market crash. I could be wrong. Percent stocks about the 50-day. And we have, about 40%. And you see today wasn't like this giant move higher because we didn't have a broad base rally today. We had a very concentrated rally in general. So we'll see if this can move higher. I do think this washed out enough if it does. So I was waiting for it to really come, under 30-ish, and we got there. Got to that 26 area. Again, could it go lower? Absolutely, could potentially go lower here. There's a lot of space down here for it to go. But as to this point, I do believe that it got at least potentially low enough. I wouldn't be shocked though if we do see one more leg still lower. That's it. That's my bias, right? But I bought stuff today, right? I bought stuff today. So that was to tell you. Sometimes, even though you have to understand what your biases are and accept them, acknowledge them, but still do what the market is telling you to do. What else we have? Put call ratio. People are bullish. Again, we did have that little bit of like we'll call it washout right there, extreme put call ratio. So again, maybe that was enough, right? Maybe that's just, there are signs that maybe we got to enough. The value line geometric index, this one, sorry, there we go. We're kind of below this area, still within a range. So I would like it better above 600. That's it. I like it a lot better above 600. But we'll see. Yeah, maybe this was a significant bottom. All right. So, I'm sorry. Let's go to DXY. I want to do dollar. Here's the dollar. And again, if this flag breaks higher, which it definitely could, I think this 107-ish area, 107.1 is very, very likely. And this would be the hard penny environment if we get a breakout from here. No doubt, in my opinion. And then we have 10-year yield. I like to look at this one too. And here's 10-year treasury, and you get the breakout right there. And it kind of, looks better here. I think we get back up to this 5%. That's the kind of, if those two things happens, the dollar shoots to, the dollar shoots up to 107-ish, and TNX gets up to 5. That's probably the next leg lower. If that doesn't happen, and this just kind of retraces and just kind of stays relatively stable, and same thing with this dollar, they don't have to decline per se, they just have to stay stable. That will let a rally ensue. So that's kind of how I'm looking at those two indicators. All right, so let's go back here to the SPY. I think this is now the new very relevant low at 497. What's the low there? 497.49, right? That's a significant low. And now we'll see what happens here. And maybe we can make another significant low higher than this one. And then we'll have higher highs and higher lows and maybe the start of a new uptrend, right? But we still got to get above that 50-day. We're close. We're close. We got to get above the 50-day. 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 That's it. As long as we're below a 50-day flat to declining 50-day moving average, I'm going to stay cautious. That's as good as it gets. I don't think that things are going to be terrible. I could be wrong, but I'm not going to be going too much too crazy buying until we can get above that 50-day. All right, check me out at Alphacharts 365. This subscriber group, awesome value for the $10 a month, and it's a month-to-month. You can stay on for as long as you want or cancel whenever you want. All right, y'all have a great day. Take care. Bye-bye.